Most traders don't lose money because they're bad at trading. They lose money because they trade too much. They sit in front of the charts all day, watching every candle, every tick, every tiny move, feeling like if they don't act, they're falling behind. So they click, again and again. Not because the setup is perfect, but because being inactive feels wrong. You see a move starting without you. You chase it. You get stopped out. You see another opportunity. You take it. Stop loss hit again. By the end of the session, nothing dramatic happened in the market, but your account is bleeding. And you're left asking the same question you've asked before. How can there be so many opportunities, yet so little profit? Most traders believe the market rewards activity, that if you trade more, you increase your chances. But that belief is quietly destroying accounts every single day. Because the truth is uncomfortable. The market does not pay you for effort. It does not reward you for being busy. It doesn't care how many trades you take or how long you watch the screen. Some traders take 20 or 30 trades a day and slowly grind themselves down. Others take 1 or 2 trades, sometimes none at all, and walk away calm, focused, intact. So why does doing less feel like failure to most traders? Well, doing less is exactly what makes the few consistently profitable. That's what we need to talk about. Part 2. Overtrading doesn't start as a mistake. It starts as a belief. The belief that if you don't take the trade, you're missing money, that the market is full of opportunities, and your job is to catch as many as possible. That more trades means more chances, and more chances means more profit. On the surface, that sounds logical. In reality, it's the fastest way to slowly destroy an account. Because the market doesn't offer opportunities evenly, most of what you see on a chart is noise. Random movement. Price going nowhere with conviction. But when you're watching every tick, noise starts to look like signal, and your brain fills in the gaps. You feel it physically, the restlessness, the urge to do something. Sitting on your hands feels like laziness. Waiting feels like hesitation. So you convince yourself the setup is good enough. You tighten the stop. You justify the entry. You're not trading your plan anymore. You're trading your emotions. Then the stop loss gets hit. And here's where the real problem shows up. Instead of accepting the loss as part of the game, you react to it. You think the next one will make it back. So you take another trade, and another. Each one slightly worse than the last. Not because you don't know better, but because losses trigger something deep and uncomfortable. Your brain hates uncertainty. It hates feeling out of control. Clicking the next trade gives you the illusion that you're doing something about it. Overtrading is not aggression. It's anxiety dressed up as confidence. Every stop loss feels personal when you're overexposed. Every small loss chips away at your focus. And the more trades you take, the more you expose yourself to randomness. Not edge. Randomness. Think about it this way. In disciplined environments, action is never constant. It's deliberate. You don't move just because you can. You move when conditions are right. Acting without confirmation isn't brave. It's careless. Yet in trading, most people do the opposite. They fire at every movement. They treat presence as productivity, and then they're confused when their results don't improve. The irony is simple. The more you trade out of boredom, fear, or the need to feel involved, the further you move away from profitability. And until you understand that, trading less will always feel wrong. Part 3. The shift. Selectivity, overactivity. The turning point comes when you realize something most traders never fully accept. Not every setup deserves your money. That sounds obvious, but it changes everything. Profitable trading isn't about finding more trades. It's about filtering harder. Most traders spend their energy looking for reasons to enter. The ones who last spend their energy looking for reasons to stay out. Because every trade has a cost. Not just the risk on the position, but the mental cost. Focus, patience, confidence. When you take marginal setups, you're spending that capital on low-quality situations. And when the loss comes, as it often does, it doesn't just hit your account. It affects the next decision. This is where trading less starts to make sense. When you reduce the number of trades, you reduce exposure to randomness. You're no longer rolling the dice over and over, hoping the probability saves you. You're waiting for moments where your edge is clear, where conditions align, where the trade makes sense even if it loses. Losses don't disappear when you trade less. Stop losses will still get hit. That's unavoidable. But fewer trades means fewer unnecessary losses, fewer emotional reactions, Fewer moments where one bad decision leads to another. The best traders aren't more active. They're more selective. They understand that most of the time, the market is doing nothing worth participating in. Price moves, but it doesn't offer. And learning to tell the difference is a skill most people never develop because it requires restraint. Think of trading as a filtering process. You're not here to catch everything. You're here to wait for a very specific set of conditions. When they're not there, you do nothing. And doing nothing is not passive. It's a decision. This is where discipline replaces excitement, where patience becomes part of the strategy, not an afterthought. Trading less stops feeling like missing out and starts feeling like control. And once you experience that shift, activity no longer feels productive. Selectivity does. Part 4. Discipline, identity, and the quiet edge. This is where trading less stops being a tactic and starts becoming who you are. Losing traders see themselves as opportunity chasers. Their job, in their mind, is to be involved, to catch moves, to stay active. Silence feels like failure, so they fill it with trades. Profitable traders see it differently. They don't measure themselves by how many trades they take. They measure themselves by how well they follow their rules. Their identity isn't built around excitement. It's built around discipline. That shift changes everything. When your focus is execution, waiting no longer feels uncomfortable. It feels professional. You stop needing the market to entertain you. You stop forcing trades just to feel productive. Most of your time is spent watching, observing, doing nothing. And that's not weakness. That's restraint. The truth most people don't want to hear is that profitable trading is quiet. It's repetitive. It's often boring. You wait. You pass on trades. You let moves go without you. And then, occasionally, when the conditions line up, you act with full conviction and controlled risk. Trading less doesn't mean you care less. It means you respect your capital, your focus, and your edge. It means you understand that your job isn't to trade the market. Your job is to protect yourself until the right moment appears. The market will always offer another opportunity. The question is whether you'll still have the discipline, clarity, and capital to take it when it matters. That's the edge most traders never build. And if you want to keep developing that edge, keep following the channel as we share more insights, trading stories, and trading motivation tips in future videos.